There's an old saying in Tennessee, I know it's in Texas, probably in Tennessee, that says, fool me once, shame on you. If fool me, we can't get fooled again.
Welcome back, everyone. This is Not Your Advisor with NYU Grad on Thursday, August 1st. Can you believe it is August 1st? The summer is almost over. Wow. A lot to cover today. A massive sell-off. And if you heard yesterday's podcast, you knew how despondent I was on all the manipulation that's going on. And I noted that I bottom ticked the VIX yesterday and things were looking really great today on the trade level, but I'm still kind of sad. Like, it just tells me that this market is completely captured by Wall Street and the sell side. And I know that this has always been the case, but since 2008, they've really commandeered the market. And when you take a look at the large institutions like JP Morgan, Goldman Sachs, BlackRock, Vanguard, State Street, they encompass the majority of all liquidity. And despite the fact that we went from 4.7 10-year yield in April to 4.0 or 4.1 now, we already got a 70 basis point cut that everyone's begging and hemming and hawing about. Despite all of that, what looks evident to me, and I'll get through the breadth numbers soon. This is important because you have to look at the complexion of the market. What the market is telling me with all the data that I am consuming and all the price information that I'm consuming. Yesterday was July 31st, the last day of the month. They painted the tape. They used Jerome Powell's speech and the FOMC decision to make prices go up because on Tuesday everyone went short into the close because it was a sell-off. So everyone got caught short on Wednesday, and we just short covered rallied on Wednesday with the FOMC rate decision and the speech. And I told you the stock market never falls when Jerome Powell talks. Never. I'm waiting to see the day that it actually crashes while he talks. So Wednesday we rallied, short cover rally into the close of the month. So all the wonderful statements can go out to all of the institutional and individual clients saying, oh, look, I'm in tech. Oh, we're up, X percent for the year. Today, on Thursday, the first day of the month, we sell off. And historically, if you didn't know, August and September are fairly, I wouldn't say 100% bearish, but when you have bearish impulses, August, September are usually indicative of sell-offs. And I just feel like this is a temper tantrum by Wall Street and the sell side saying, I want my rate cut. I want my rate cut now, Jerome Powell. And they're almost sticking their middle finger up, saying, hey, you know what? Yesterday we rallied because you were talking. Today we're going to crash it because you didn't cut this month. And now we have to wait till September. Well, let's wait and see. If the markets continue to go south, I guarantee you the Fed will have an emergency meeting and they will cut. Their quarter basis point or 50 basis point cut, which won't do anything realistically. We already went from 4.7 to 4. So if they cut 25 basis points or 50 basis points, we'll go from 4 to 3.75 or 3.5. That will help home builders like Lennar, Toll Brothers, and D.R. Horton, right? And it'll help the banks because the banks are making a spread profit on the Fed funds rate. To us, the consumer. You're welcome. So I think that Wall Street BlackRock, Goldman, JP Morgan, all the banks and the Wall Street clan are basically trying to force the Fed to cut. And folks like Danielle DiMartino Booth have, praised Jerome Powell, and she used to work there, that he's trying to be politically agnostic, does not want to get politically, involved. If they cut now, it looks like they're helping the Democrats. If they don't cut, they're helping the Republicans, right? Like, there's a political fight here. And there's no hiding behind the fact that when Trump was president, and I don't want to be political, this is facts. I remember during COVID, Trump used to verbally abuse Jerome Powell publicly. So let's see what happens, right? Like, again, the narrative is we're not getting rate cuts till September at the earliest. But if Wall Street continues to make the sell-off continue, it's going to force the Fed's hand. Because if the market crashes, that's bad for incumbents coming for the election, right? Like, because it's just ammo for, forget Trump, anyone that's running against the existing party. They're just going to say, oh, look, the market tanked, blah, 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 blah. So it just is more ammo for the opposition of the incumbents. So we might see a rate cut as an emergency in August if prices continue to fall. Wow, that was a big sidebar. Let me go through the breadth numbers. All right, so for Thursday, we had 464 new highs, 290 new lows. 20% of stocks were advancing on the NYSE versus 77% declining. 44% of stocks were below its 50-day, and 34% of stocks were below their 200-day moving average. Let's take a quick tour through mega cap land. This is all before the close. Microsoft was down 0.3%. And keep in mind, Microsoft triggered the rally, or that was a narrative. Microsoft reported earnings on Wednesday, and they said all this stuff about AI and chip warehouse and server farms. So everything, went sky high to the moon on Wednesday. But they were down 0.3%. NVIDIA, now let's back up here. NVIDIA was down 6.6% today. So on Tuesday, if you remember, they were down like 7%. And then on Wednesday, they were up 12%. And then today, they're down 6%. So can you guys do the math? They're basically just down 6%. All of the semiconductors got crushed. Google was down 0.4%. Apple was down 1.6%. Meta, surprisingly, was up today, up 4.83%. Amazon, before the close, was down 1.56%. And Tesla was down 6.5% during the day session. Taking a quick look at the groups and sectors, technology led to the downside after leading to the upside yesterday and leading to the downside on Tuesday. They were down 3.5% today. Consumer cyclical down 2.5%. So, I'm sorry, but technology was down 3.5%. Consumer cyclical was down 2.5%. Energy was down 2.2%. Financials down 2%. Industrials down 1.9%. Basic materials down 1.6%. The only green sectors were utilities, real estate, consumer defensive, and healthcare. I'm actually surprised real estate was up with all of this talk about no Fed rate cut. So let's keep going. There's a lot to cover. So I did want to note that the 25% off for premium subscription is still going on for free members as a celebration of getting beyond the 250 podcast. Today is episode number 254. So take advantage of that. there's a lot of great discourse and content going on, even just the private chats that I'm having with a lot of the premium members. So take advantage of this offer before I pull it. I don't know how long I'm going to make it available, but I'm celebrating, right? Like I'm doing well with Substack. It's a passion project that's going really well, and I want to invite more folks to the premium side. Thank you for the free members who have rated me on Spotify and Apple Podcast and have earned. Not earned, I should say the wrong word. If you truly value the content, you did me a favor by basically sharing your opinion, and in return, in exchange for your true opinion, I have given those free members 3 free premium months. So thank you for doing that. So let's keep peeling this onion here. So I'm recording this at 5:40 p.m. New York, but at around 5:20 p.m. New York time, East Coast time, I did a quick screenshot of Amazon after hours with Apple. They are both selling off right now after hours. So I don't remember if I included in the private chat or publicly, but it's beyond, it was yesterday, so I could share it. So yesterday during the rally, or whatever you want to call it, the bounce, I almost bottom ticked the VIX, and I bought VIX calls. And I'm up really big, and I actually sold all of them off today. However, I don't think this move is over. So I rolled some of those profits into SQQ, which is 3x short the NASDAQ. I normally do not do this. It's a pretty, it's out of character for me, but what I'm seeing right now is a temper tantrum. Usually when you have this much volatility, when the volatility index itself goes from 11 to 20, it's a temper tantrum. It's Wall Street saying, I want my rate cut. So I think volatility is going to stay with us for a little bit while longer until something soothes the market. Like, I don't know, we've been being jawboned for 2 years. Powell could say, on Twitter or X, you know what? I looked at the new data, and now we're thinking about cutting rates before September. So they don't have to cut rates. They just have to float the idea, and that will cause a rally. That's where this market is. It's a binary market, light switch on off. And the Mag 7 and the semiconductors make up 60% plus of all of the action in the market. So, if Apple and Amazon continue to crash, and Microsoft crashes, and Nvidia keeps going south, do you think Roku, DraftKings, GameStop are going to save the market? No. So that's why I made that bet. It's a small bet, but it is what it is. I'm calling BS on the market. So what stuck out, another thing that I mentioned, so many of my subscribers, both free and paid, especially on the paid side, I have a very wide mix of expertise and experience. Some are very experts, like Aloysia, Metals, Oil, and Mining, who was on the commodity stock exchange all his career. I have folks that have never traded in their lives and have always been directed by an advisor. So I noted this morning that I expect today a ton of bearish engulfing patterns. So many of you might be saying, yeah, I know what that is. Many of you don't. So basically, to put it simply, if I explain this to my grandparents or my mother or relatives, the candlestick for today is a sell-off from a green candle yesterday, and it's actually taller. It's a taller building than yesterday to the downside, and it encompasses all of yesterday's action. That's why they call it a bearish engulfing pattern. And we had that across the board today. And one of the things that tipped me off was my breadth studies, was the fact that how binary yesterday's rally was and how obvious it was with Jerome Powell speaking and how it rallied overnight when the volume is thin trading. Most of yesterday's move from Tuesday's close to yesterday's close was during the nighttime while you and I were sleeping. The majority of the green move was overnight action, not intraday. So that was one of the tipping points for me. And I was just stalking the VIX, and it just was so obvious what was going on with Jerome Powell talking. And as soon as he left the podium, prices started to fall. It was just so obvious. But at any rate, let's go through what was strong, what was weak. So what was strong today? A lot of these are going to be bearish ETFs, like SOX-S, which is 3x short. The semiconductor was up 21%. I have a few premium members who are into this. They are crazy pirates, and they're in it, and they're doing okay. UVIX is 2x long VIX, up 17.7%. UVXY is a bullish VIX, up 14.16%. The volatility index itself was up 13.6%. Tesla Z, which is short Tesla, up 13.26%. Tesla Q, which is 2x inverse of Tesla, up 13.2%. Zeta Global Holdings, up 12%. If you're a premium member, they made bank on Zeta. They probably made more than I did. Carvana, 9.98%. TZA, which is short Russell 2000, up 9.7%. SQQQ, which I told you I started picking up shares. I moved my gains from VIX calls to SQQ. It was up 7.3%. Meta was up 4.8%. Let's see how long that lasts. These are all short ETFs. SKF, FAZ. Okay, Sweetgreen, Salad, Takeout, 2.98%. AbbVie, 2.37%. Race, which is Ferrari, up 2.08%. Ballers buying Ferraris on their short calls. Walmart was up 1.6%. For the week, I'm only going to go all the way through the 5% red. Because if I go to 4, 3, and 2%, I'll be here for hours. All right. SOX-L, which is long semiconductors, down 21%. ARM Holdings, down 15.7%. MGM, down 13%. Hims and Hers, down 12.8%. Lam Research, 9.8%. Qualcomm, 9.3%. ACMR, 9.3%. Riot, 8.54%. Broadcom, 8.5%. AMD, 8.26%. Wayfair, 8.12%. Uranium, 8.1%. Marathon, 7.7%. IREN, 7.7%. Etsy, 7.6%. SOC Semiconductor, 7.1%. Rivian, 7.1%. NVIDIA, 6.6%. Affirm Holdings, 6.6%. Tesla, 6.5%. SMH, 6.4%. Zillow Group, 6.3%. MicroStrategy, 6.3%. New York Community Bank, 6.2%. SVM Silvercorp Metal, 6.1%. ASML Holdings, 5.6%. Hovanian, 5.5%. Intel, 5.5%. Extreme Networks, 5.3%. And Intel crashed after hours, by the way, after earnings, down 10%. DJT, 5.3%. Uber, 5.3%. Lyft, 5.2%. Coinbase, 5.2%. MongoDB, 5.1%. ARK, 5.1%. Hut, 5.05%. Bitfarms, 5.02%. I'm going to stop there because if I go to 2% red, I'll be here for a long time. What to watch? Keep watching the Mag 7, the semiconductors, the 10-year treasury yield, bonds, economic data calendar that I've linked in the show notes, True Up IO layoffs. I believe, I have sources within tech that indicates that there will be massive layoffs in Silicon Valley. And if you listen to Danielle DiMartino Booth, she also believes that layoffs will continue to go higher. So watch that very closely. Watch credit card delinquencies as well. Free members, I appreciate you. Please check out the discount. It's only basically 39 cents a day to go to premium. I promise you, you will get value out of it, whatever level you are at in the financial game. I will see you all after the Friday session. Premium members, please stay on. We're going to go over macro as well as the best defended stocks. That's my train.
Stand clear of the closing doors, please.